How to invest in 2023. Imagine if you had invested 10,000 and gained a staggering 58,000% return over the years, leaving you with around 58 lakh. It might sound too good to be true, but it's exactly what happened to the investors who followed the strategy of legendary investor Peter Lynch. If you're interested in investing, then you've probably heard of Peter Lynch. He is one of the most successful investors of all time, and his track record speaks for itself. During his time managing the Fidelity Magellan Fund, Lynch achieved an incredible 29% annual return, and that's something never heard in the world of investing. So what was Lynch's secret? What's up with the 10-bagger formula? And how can you apply his strategy in 2023 despite the Adani stock massacre? Sit back, grab a pen and paper, and let's learn from the master of long-term value investing. Chapter 1. Peter Lynch. Who is he? Peter Lynch is a name that's synonymous with successful investing. But did you know that he started his career as a golf caddy? That's right. Lynch's journey to becoming one of the greatest investors of all time was anything but conventional. Born and raised in Massachusetts, Lynch attended Boston College, where he studied history and philosophy. After graduation, he found himself working as a door-to-door salesman for Fidelity Investments. But it was during his brief stint as a golf caddy that he caught the eye of Fidelity's president, George Sullivan. Sullivan was impressed with Lynch's work ethic and rapport and offered him a job as an analyst in the company's research department. It wasn't long before Lynch's natural talent for investing became apparent. In 1977, he was named manager of the Fidelity Magellan Fund. Under his leadership, the fund grew from just $18 million in assets to a staggering $14 billion. Lynch's hands-on approach to investing and his ability to find hidden gems in unexpected places made him a legend in the investment world. But Lynch's success wasn't just due to his unique background or intuition. He had a disciplined and thoughtful approach to investing that helped him avoid common pitfalls and make smart decisions, even in turbulent market conditions. In addition to his investment career, Lynch is also a prolific author and has written several books on investing, including the classic One Up on Wall Street and Beating the Street. Lynch was a true investing maverick, and his unconventional approach to the market set him apart from other fund managers. He believed in getting his hands dirty and doing the legwork himself. That's why he would often visit the companies he was considering investing in, meet with management teams, and even visit their factories and stores to get a better sense of their operations. This approach not only gave him a deeper understanding of the companies he was investing in, but also allowed him to identify opportunities that others had overlooked. Lynch's philosophy was simple: invest in what you know. He knew that it was easier to identify great investment opportunities in industries or companies that he understood well, and he was always on the lookout for hidden gems that others had missed. That's how he discovered companies like Dunkin' Brands and The Limited, which went on to become massive winners for the Magellan Fund. But Lynch's success wasn't just a matter of luck or intuition. He had a disciplined and thoughtful approach to investing that helped him navigate even the most turbulent market conditions. He understood the importance of staying patient and avoiding common pitfalls like market timing and chasing hot stocks. So, in this video, we're going to take a closer look at Lynch's investment strategy and show you how you can apply his approach to your own portfolio in 2023. We will explore his key principles and show you how to find those hidden gems that can generate huge returns over the long term. So buckle up and get ready to learn from the best. But before that, if you're liking this video so far, drop a like and press the subscribe button for more such content. Chapter 2. Lynch and Long-Term Value Investing. As discussed, Lynch's investment philosophy can be summed up in one phrase: invest in what you know. He believed that the best way to find winning stocks was to look for companies that you understand and have personal experience with, being called the boots on the ground approach. However, there are some other key facets to his strategy. First, Lynch was a long-term value investor who believed in holding stocks for the long haul. He looked for companies that had strong fundamental numbers, such as solid earnings growth, low debt-to-equity ratios, and high returns on equity. In fact, Lynch is credited with popularizing the PEG, or price earnings to growth ratio, to indicate the PE valuation paid per unit growth rate. A second key component was his focus on small-cap stocks. He believed that small companies were often overlooked by Wall Street analysts, which meant that there were more opportunities to find undervalued stocks that had the potential to deliver big returns. A third concept is Peter Lynch's 10-bagger formula, which refers to his strategy of investing in stocks that have the potential to increase in value by 10 times or more over the long term, just selected based on the above parameters. During his tenure at Magellan, Lynch bought more than 100 10-bagger stocks, including Fannie Mae, Ford Motor, Philip Morris International, Taco Bell, Dunkin' Donuts, and General Electric. Let's look at some winners, including these 10 baggers. The Limited. Lynch invested in this women's clothing retailer in the early 1980s, and the stock went on to deliver a 10,000% return over the next decade. Dunkin' Brands. Lynch spotted the potential of the then little-known company in the early 1990s, and the stock delivered a whopping 3,400% return over the next decade. However, he even had some large-cap winners like Walmart and Ford. Lynch saw the potential of the retail giant Walmart early on and invested heavily in the stock, which went on to deliver a 3,000% return during his time at the Magellan Fund. As for Ford, Lynch was a big believer in the US auto industry and invested heavily in the Ford stock during the 1980s. The stock was a top performer for the Magellan Fund, with a return of over 1,000%. Lynch's ability to find winning stocks in unexpected places and hold on to them for the long term was a key factor in his success as an investor. Peter Lynch is known by a nickname in the investing community: Chameleon. This nickname comes from Lynch's ability to adapt his investment strategy to changing market conditions and economic environments. He was known for being flexible and willing to adjust his approach as needed. In the next chapter, we'll take a closer look at the relevance of the strategy in 2023. So what do you think? Does Lynch's long-term strategy still work in 2023? Shout out your answer in the comment section. Chapter 3: How to Invest in 2023, Applying Lynch's Strategy. Is Peter Lynch's investment strategy still relevant in 2023? The answer is a resounding yes. Despite the ever-changing landscape of the stock market, Lynch's approach to investing has stood the test of time and continues to be a valuable resource for investors today. One area where Lynch's strategy is particularly relevant in 2023 is in the current market environment. Many investors are concerned about high market valuations, potential market bubbles, and economic uncertainty after the brunt of the COVID-19 pandemic. In this context, Lynch's approach of focusing on strong fundamentals and long-term value can help investors navigate the current landscape. Another reason why Lynch's strategy is still relevant in 2023 is the increasing popularity of passive investing and index funds. While these investment vehicles have their advantages, Lynch's active, hands-on approach to investing can help investors find opportunities in companies that are overlooked by Wall Street analysts. Additionally, Lynch's emphasis on investing in what you know is especially relevant in today's technology-driven world. As new industries emerge and existing ones continue to evolve rapidly, investors who understand these industries and their potential can find opportunities that others may overlook. Diversification in the 2023 risk environment is important. During Lynch's tenure as the manager of Fidelity's Magellan Fund, it is estimated that the fund held anywhere from 1,000 to 1,500 stocks at any given time. This may seem like over-diversification, but Lynch still delivered excellent returns. In 2023, fundamentals have become even more important because of the interest hike scenario where central banks have a hawkish outlook on inflation and liquidity. Lynch's approach to deep fundamental analysis can help pick apart swimmers from stocks drowning in debt. Chapter 4: Tips for Beginners. So how can you apply Lynch's strategy in 2023? If you're a beginner, you can definitely profit from this. As a beginner, you may want to know deeper insights from Lynch's 3 books. If you want us to make a summary video on either, sure do go down in the comments and tell us. First, it's important to do your research and due diligence when evaluating potential investments. Lynch emphasized the importance of understanding a company's business model, industry trends, and financials before investing in its stock. Another key tip is to focus on companies with strong earnings growth and solid financial fundamentals. Look for companies with low debt-to-equity ratios, high returns on equity, and consistent earnings growth over time. Lynch's focus on small cap stocks also provides an opportunity for beginners to find undervalued companies that may be overlooked by larger investors. However, it's important to keep in mind that small cap stocks can also be riskier than their larger counterparts, so be sure to diversify your portfolio and manage your risk accordingly. Finally, Lynch's emphasis on investing in what you know can also be a helpful tip for beginners. Consider investing in companies and industries that you understand and are familiar with, as this can help you make more informed investment decisions. It's important to note, however, that no investment strategy is foolproof, and there are always risks involved in investing. It's crucial for investors to do their own research and carefully consider the risks and potential rewards of any investment before making a decision. By following these tips and adopting Lynch's approach, even beginner investors can potentially find success in the stock market. And that's a wrap on Peter Lynch's investment strategy. Lynch's approach of focusing on long-term value and strong fundamentals, along with his emphasis on investing in what you know, has proven to be highly successful over the years. His track record of finding winning stocks in unexpected places and holding on to them for the long term is a testament to the power of his approach. So you too can pick up companies like Amazon or Berkshire Hathaway that have returned over 50,000 in their lifetime applying Lynch's strategy. Whether you're a beginner or a seasoned investor, there are plenty of valuable lessons to be learned from Peter Lynch's investment strategy. By following his approach and doing your due diligence, you too can potentially uncover hidden gems and achieve long-term success in the stock market. So why not give it a try? Who knows, you could be the next Peter Lynch. If you want us to make a summary video on Lynch's books, sure do go down in the comments and tell us. Further, if you want to know more about how to maximize your investment returns from dividends, then visit this video on the proven strategy for living off dividends.